Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Sunday, the 2nd of June. Starting off with the S&P, which has almost done exactly what we wanted it to do in the sense, or what we expected it to do in the sense that we were factoring in the way that below 52.64, the old peak from the turn of April, then we could head back down to the 50-day moving average, 51.80. In fact, the low on Friday, 51.91 before we had a key reversal to the upside and closed back above 52.64, so that is a big plus. And the longer we stay above 52.64, the greater the chance of a move up to the top of that rising formation from the back in September, 54.60, which is potentially a target as soon as the end of this month. Early and end of day close well below 51.80, currently suggesting that we might have to have a sub 5,000 dive. Moving on to the Nasdaq, and here you can see that this market doing a little bit what the S&P did, i.e. a lunge towards the 50-day line, 18,000, but managed to bounce above that. Very strong candle, hammer candle on Friday, and that suggests that we'll have momentum on the upside, but at least towards the record highs, towards 18,800, and then potentially up to 19,700 by the end of this month. Once again, early and end of day close well below the 50-day line, 18,000, really suggests that we're going to top out for this market. Moving on to the stocks, and Spire is the first one on the list here. We've got a potential falling wedge rebound, and also got bullish divergence as well, which is the reason for the inclusion today. So lower prices there for May, but RSI staying the same as it was back in April. The real trigger for a move to the upside would be an end of day close back above the old December and March support there around $2.50 plus, and breaking that line of resistance there from back in February, $2.66. Initial target here, $3 up, after that up to $3.80 or 90 at the top of that triangle from back in March by the end of this month. If all goes well, then we get a quick rebound above $2.50. Next stock is Ambarella, and here gapping up. We've already had a broadening triangle base here. We've gapped through most of the recent resistance there, $52 being the most important, and above that looking for $68 or even $69 by the end of this month, or even sooner. End of day close through $60, and the peak of Friday, $59.99, in fact, would be a decent momentum signal. Moving on to the next situation, which is American Oncology, and here you can see that we've got a broadening triangle potentially as the rebound trigger for this stock. We've also had an end of day close on Thursday above the top of the latest gap, the exhaustion gap there at $2.63. Above that, looking for the 50-day line, $4.33, and then up to $7 by the end of next month at the top of that late 2023, early 2024 broadening triangle. Next up is a stock which will hopefully quench the thirst of some investors. Here you can see that we've got Boston Beer breaking through the 50-day line, $284, also breaking through recent resistance at 302, and above 302 on an end-of-day close basis, we're looking for $380, perhaps as soon as the end of this month, given the sharp snapback that we've seen in the shares. But the key here is staying on the right side of $300. Next situation is Biner, and here we managed to guess the trajectory successfully so far. We're just missing out on the top of that broadening triangle there from April at $12. Hopefully we'll get that early next week, and then we can go on to retest $16 and the end of March peak for the shares over the following week or two. Another situation which has delivered the goods is brand engagement, and here you can see that we've broken out of that falling wedge. We've broken the 50-day line as well, and actually taken out all the resistance up to the $3.80 mark, which was, the $7.80 mark, which was post-April resistance. End of day close through $8 could then hopefully give us $12 by the end of next month, but obviously there has been a bit of a pullback, so ideally we stay on the right side of $3.90 and the 50-day moving average, whatever happens there. onto a relatively obscure situation, which is cyclist sell, and here you can see that we've got this broadening triangle base. Ideally, we will stay on now on the right side of the 50-day moving average, which is currently around the $2.05 area, and above that, looking for the shares to head to the top of the triangle, $3.50 by the end of this month. The next candidate, Golden Sun, looking quite chirpy as well at the moment. Inverted head and shoulders, and then finding support at the old neckline resistance, $5.50 above that. Looking for a move towards the top of the triangle there from October last year, currently pointing as high as $13. And we're looking for that as soon as the end of this month, given how sprightly the move has been from the lower levels over recent days and weeks. GameStop is an interesting situation at the moment, largely because people are gloating, or some people gloating at the pullback that we've had from the best levels, but it does look as though we're in a rising trend channel. We've had a gap to the upside after the island reversal that we had mid-month. And that suggests that the longer we stay above the floor of that rising trend channel from March, currently around $20.90, the greater the chance of a move up to $35 by the end of this month or even sooner. It'll be interesting to see also how the effect of the RSI bouncing on neutral 50 helps the shares, as will or does the rising 50-day moving average. Next up is Gap, which is perhaps not as trendy as it could have been or was before, but still the share price looking very, very strong indeed. Rising trend channel there from back in basically this time last year, in fact, before that. And top of the channel there, $32.50. We're looking for that in the first part of this month, especially while we're above the opening support level and the top of that gap down that we had in March, $27.20. So above $27.20, looking for $32 plus over the course of early June. Interesting setup coming up at Genprex with the situation that we're hoping for a broadening triangle reversal. The main thing in these situations tends to be finding comfort above the 50-day moving average, which in this case is rising now at $2.60. The longer we stay above that, the greater the chance of a move to $6.50 as soon as the end of next month. But I think the main joy there, really, the gap through that 50-day moving average and holding above that. On to the last three. The first one is KidPick, which we've looked at quite a few times before. We've broken a trend line there from back in March. That was broken around $3.30, and now we closed the week above the 50-day line, $3.90. Next level up to as high as $8 the longer we stay above the 50-day line, and looking for $8 by the end of next month or even sooner. Only back below the $3.20 area in the floor of that channel, rising trend channel from February, really delaying the upside scenario. On to Penn Entertainment, which seems to be breaking out of that, or has broken out of that falling wedge there at $15.90. Above that, we're looking for $20 plus, which is the top of that broadening triangle from back in February, and we're looking for that early in June. Last one on the roster is VaccineX, and here we managed to push through the 50-day moving average after we've already had an extended basing for this stock, but gapping through there. It's the second gap in the recent times. The first one was a gap and then a gap fill rebound, and we've gapped up again. The longer we stay above the 50-day line there at $6, the greater the chance of a move up to $10 by the end of this month, but the key is holding that 50-day line. That's it for me today. More updates tomorrow.